welcome to our Edison TV interview with Aleš Stárek, CEO of FACC, a global aerospace company developing and manufacturing advanced aircraft components and systems. My name is Klaus Schinkel of Edison Group. Aleš, it's a pleasure to have you with us today.
Good morning.
Hi, so let's get started right away. Maybe as a bit of background, can you describe how you are positioned in the aerospace market and what are your key competitive advantages?
FACC has been in the aviation market since 30 years. So we are looking back at quite a long time of experience in composite materials. And this is also the application that FACC is providing to its customers, focusing on composite material applications in the aerostructure segment, but also in the engines and in the interior segment.
Thank you. Now, the commercial aerospace market obviously has suffered quite a bit from the pandemic. So what are your expectations for the recovery and subsequent growth potential for that market?
Yeah, that's right. I mean, the year 2020 has been probably the most difficult year in the company's history and also in aviation history. And we have experienced a very substantial decrease in turnover in 2020, from 800 million turnover in 2019 down to 500. The business volumes since then and then throughout 2021 is stabilizing somehow on these low levels. What we've seen is that the market is picking up slowly. The air travel is now coming back. Lockdowns are released, and this is having a positive impact on our industry as well. So we do expect a slight recovery starting in 2022. And going further into 2023, 2024 is probably not a real V-shaped recovery as people were expecting in the beginning. It's more a wide U-shaped recovery, but that's what we are prepared for. That's what we are looking for.
Yeah, okay. And what measures have you specifically taken to adjust to the post-pandemic market environment as it continues to develop?
Yeah, first of all, it was important for us to understand how big the impact on the company is going to be. And so throughout the Q2 in last year, we have done quite a lot of modeling in order to understand how deep the dive is going to be. And based on that, we have set up a very stringent restructuring program. To be honest, we already started to design a margin improvement plan in the beginning of 2020. So we were a little bit a step ahead of all the market turndown. So that's why probably it was a little bit easier for us to react quickly and to have a quick let's say execution phase. So the restructuring has been conducted in Q3 and Q4 of last year. We downsized the company to especially on the fixed side or fixed cost side to match the business volume that we were expecting in 2020 and 2021. And then we are taking it from there. So basically, it was a strict fixed cost saving plan on travel costs, as you can expect, and then others. But most importantly, it was a restructuring in terms of headcount. So basically, we have restructured more than 20% of the company workforce, and along with that, as you can imagine, it was not only about reducing headcount, it was also about changing processes, decision-making processes, changing organizational structure. So as part of that, we have basically merged two engineering departments. We have also done quite a lot of organizational restructuring in quality. And last but not least, as basically the impact on the business volume are very strong in the aerostructure division and also in the engine nacelle division. So management-wise, we have combined these two divisions, and now we are basically having a kind of to a divisional organizational setup, having said so, we are still reporting 3 divisions, and we are thinking about the business in 3 divisions. But management-wise, we have done quite a lot of consolidation there.
Now, you mentioned already, sort of looked a little bit at the various divisions, and how are they positioned in terms of revenue development, profitability, and cash flows?
Yes, starting with let's say our most profitable division before Corona or COVID-19, which was aerostructures. In terms of margins, we have not suffered so much. So it's still basically on project level the most profitable division in terms of margins going forward. However, that division suffered most in terms of business volumes. We have gone through some kind of portfolio change in 2018, 2019 in aerostructures. So we have quite a lot of portfolio portfolios changes here, and so the old projects run out, and then the new projects have not started on the volumes that we have expected due to COVID-19. So as we now expect the market to recover, and the market is starting recovering, especially on the domestic and then on the short haul flights, the volumes in that division will grow continuously. Let's say starting slightly 2022, and then continuing strongly in 2024 and 2023 and 2024. So basically, we do expect the division will come back to the double-digit EBIT margins. And most of the projects are not only generating profit but also cash flows. In a similar way, the engine nacelle division has a very healthy project portfolio. There were a couple of 1 or 2 projects that were not generating high margins in the past, but here basically 2022 is a kind of a new start, fresh start for these projects with new prices negotiated. So also the project portfolio in an engine nacelle will become a high margin project portfolio. So in the same way, as aerostructures are now gaining momentum, the engine nacelle division will gain momentum in terms of increasing volumes, and then profitability has the same upside potential to reach double-digit EBIT margins in the future as it is in aerostructures. On interiors, this is traditionally a low margin business, because most of the project portfolio is coming from the floor-to-floor market. So traditionally lower margins than in aerostructures and an engine nacelle. And here we still are in the process of improving and improving the margins and implementing margin improvement plans. One of the biggest project that we are now realizing is transfer of production to Croatia, which is a kind of low cost or best cost country in these terms. And this project is basically starting in 2022, where we basically starting ramping up the facility in Croatia, and this is the most important element of our margin improvement strategy for interiors. So basically, target profitability for interiors is around 5 to 6% EBIT margin. Once Croatia is then up and running and fully utilized, which will be probably around 2023, 2024. And in terms of cash flows, the same way, not any huge investments planned here. So also cash flow generation is kind of coming along as the margins are expanding.
Pre-pandemic, we had like around 800 million revenues. When do you think realistically can we expect that we reach these revenue levels again?
Yeah, as already mentioned, the recovery for us is pretty much a wide U-shaped recovery. We've seen that the single aisle platforms are now coming back. We have indications from our customers, both Airbus and Boeing, that the rates are going to steadily increase from the current levels. especially from the Airbus A320 platform. This is an important message for us, since this is the biggest platform in terms of turnover for us, with revenue shares around 25% of total revenues. So the recovery in the short haul market and domestic market is very important for us. This is coming nicely. On the other hand, as you can see it and you can observe in the intercontinental market, the recovery is not really progressing. So we do have a little bit of traffic between Europe and the US, but Asia is pretty much not existing. So still, and especially China, still pretty much in lockdown. So this will take some time. So we do not expect that 2022 will be a major game changer in terms of intercontinental flight recovery. So this will need some more time. And also here we do have with the A350 and then the Boeing 787 two platforms that are very important for us in terms of revenue generation. So when we look at it as a mix, then, as I say, slight increases in revenues in 2022, and then basically a stronger recovery 2023, and probably, depending on how quickly the intercontinental market will recover, 2024 we could be back to 750 million, maybe 750 plus, and in worst case 2025 we should be on pre-corona levels again.
Now, looking a little bit beyond your core commercial aviation activities, what are your plans and opportunities? What opportunities do you see and to diversify from that core division?
Yeah, we kind of used 2020, and 2020 was a kind of important year for us in terms of strategy. Before the FACC strategy was centered around Vision 2020. And so kind of along with the pandemic, we used the time to review and challenge our situation. Is it aviation? Is it different kind of other industries that we would like to expand into, that it would be reasonable for us to expand? And at the end of the day, we realized that aviation is the core of our expertise, is the core of our technology. And that we would like to spend the next, let's say, 10 years strategically work and expand in everything basically that is flying. So we put the commercial aviation as a baseline, and then extended a little bit into lower areas, and then this is our drone business that we already started a little bit before, and then we dipped here and there into different kind of projects, and we see there is a huge potential in the market, especially in let's say 2023, 2024. Then that's where we want to expand, and then above, when we go into higher levels of flying, then basically it's the space. And also here we see with the privatization of the space industry, yeah, where basically you see quite a lot of new entrants. It's not only NASA and ESA and the Russians and the Chinese state programs, but it's a lot of private companies coming into that market. And of course, composite is going to be a key technology for the space industry, for the launchers especially, and so we see quite a huge market potential here, and we want to enter that market and generate, let's say, significant turnover by the year 2030 out of space.
Good. Well, this concludes our interview. Aleš, thank you very much for this very interesting insight. Thank you.
Thank you very much too.